Good afternoon, everyone, and welcome to today's webinar by the Payments Association, sponsored by Payall, on Beyond Borders, Redefining Cross-Border Payments for a Customer-Centric Approach. Before we get started, I've got a few quick bits of housekeeping. Matt Williamson, SVP and Industry Principal in Endava, is moderating today's session. We'll start by hearing from Gary Palmer, Founder, Chairman and CEO of Payall, before we move into the panel. Quick note about the Q&A. You can submit questions to today's speakers by typing your questions into the Q&A tab of the control panel. There is also a chat box for discussion. Please do use the Q&A tab, as this will help the speakers keep track of what's coming in, and you'll be much more likely to get answered. You can send in your questions at any time, and the panel will address them, some as they come through and some towards the end. We do want your input into the shape of this conversation. We'll be making plenty of time to answer them, so please don't be shy. You can also ask questions anonymously if you'd prefer your name not to be attached. If you have any technical issues during the session, please feel free to send a message through the chat box to Christina Gatens from the Payments Association. I'll now hand over to Matt to kick things off.
So good morning, good afternoon, and potentially good evening, depending on where you are today. We've got a really exciting panel today and discussion around redefining cross-border payments with a customer-centric approach. So as the status quo for cross-border payments in infrastructure evolves, the customer experience needs to be factored in. So from a customer perspective, cross-border payments and processing was historically slow, expensive, and opaque. The advances in legislation, data sharing, and automation have smoothed the way, but there is still uncertainty around risk, coverage, and especially cost. So what are the changing end user expectations for payments and how they are made and received in contrast to domestic payments? And where should we expect the focus to be within the next 5 to 10 years? So that's the thematics of where we are today. I'm going to hand over to Gary, who's founder, chairman, and CEO, so quite a busy guy, of Payall Payment Systems, for some initial insight, and then we'll move to the panel. So Gary, over to you.
Thanks, Matt, and hello, everyone. We'll try to keep this opening section quite brief and straight to the point. We'll walk through some slides to provide some context. Let's see where they are. Okay. So let's go back a slide or two, I think, to the beginning. Christina, can you go back to the beginning, please? I think. While we're getting the slides sorted out, one of the things I'd like to mention is that the title of this session is really about the user experience. And so many white papers, research documents, as well as conversations that have happened over the last several years in cross-border, many of those are fixated on other aspects of the challenges of making cross-border payments efficient. And we've sometimes, I would say, lost sight of the user experience. And so what we're aiming to do in this panel is to dive right in to deal with some of the most important aspects of solving the problem of cross-border payments that affect users. So let's dive right in and just kind of try to get a sense for where we're at. Christina, the next slide, please. Basically, we have a problem, and the problem is recognized by the G20, by central banks. Let's see. For some reason, I'm not seeing the slide changing. Matt, are you seeing the slide change?
Sorry, bear with us 1 second. I think Christina's just having a technical issue. I'll see if I can share from my end.
Okay, so when we look at the really the root cause of the problem, it is because there are so many moving parts, there's no interoperability, and there's never been software to deal with it. Those are the fundamental issues. It's really the risk or the compliance and regulatory parts are minor in the context of the lack of software, the lack of interoperability, because with the right software and with interoperability, you can address and overcome efficiently any of the compliance and risk issues that we face. So if we go to the next slide, the G20 provided an overview of 19 building blocks of how to enhance and improve cross-border payments. 19 is a big number for me to count to. Let's go to the next slide. It's a lot of things to try to deal with at one time. I like to deal with maybe 4 things. And I think Chairman Powell summarizes this pretty succinctly, that we should make cross-border payments safe, make sure they're compliant and safe, make sure they're efficient, which is low cost and fast to the ecosystem, make sure they're transparent, and make sure they're inclusive. And it's a big market. It's $160 trillion now, growing to over $250 trillion by 2030. So if we go to the next slide, the objective of this discussion is centered on these ideas that there are, in fact, game-changing events happening around us in terms of new paradigms, new technology that will, in fact, ensure that cross-border payments are safe, transparent, efficient, and inclusive. So let's try to understand why they've not been that we've not been able to achieve these objectives in the past. Because it's one thing to describe the problems, but it's another. I think it's important to understand why these problems exist and what are the root causes. So if we go to the next slide, if you're an originating institution, if you're a bank, if you're an EMI or some other financial institution, and you want to offer cross-border payments, the fact is that there is no software, a part of your core bank system or digital bank platform, that allows you to automate the risk and compliance aspects of this business. And it even gets worse. There's not any software that allows a user to easily make large scale or mass or bulk payments. And this is why in some financial institutions, there are hundreds or thousands of people that are looking at these transactions that are initiated by their customers, and then they're calling a customer to try to get some additional documentation, whether it's a bill of lading, a customs declaration, or an invoice, because there's never been any software to automate these processes from beginning to end. Now, this is compounded because when the financial institution that's offering cross-border payments, whether it's a bank, credit union, or some other financial institution, when they've gone to their regulator, they've submitted their business plan, and it includes all of their manual processes. And if you've looked at the amount of fines that have been issued over the last 10 years, they're substantial. And usually the fines are not because someone was involved in some nefarious act or the bank facilitated money laundering or terrorist finance. It's because they couldn't follow their own processes because they were manual. So this is on the originating side if you want to offer it. And if you look at the stats, there are fewer and fewer financial institutions that are offering cross-border payments today than a few years ago. So if we go to the next slide, and this is a reflection of the old model where you have correspondent banks now that are clearing foreign-initiated payments. They're faced with the exact same problem in that there's never been any software available to them to support these payments. But they've got an even bigger problem in that they can't see who the disperser was, their commercial activity or source of funds, any of the sanctions checks that were done by their partner foreign bank. What are the results of the electronic ID verifications? This data is opaque. This information is opaque. And even the data that can be shared, there's no system, there's no interoperability that allows it to be shared. And data that is required to further investigate a transaction or to deal with a potential compliance or risk issue, there's no system to efficiently and safely ensure the consent management required to do that. So when we look at the challenges facing the originating institution and the correspondent bank, The next slide speaks to what does this actually mean for users? It means the experience is pretty bad. Whether you're a sender or a recipient, there are a host of issues that you face or that our customers face that they've been dealing with for more than 50 years. The good news is the world has changed. And if we go to the next slide, we're going to now talk about some of those changes, and there are changes in new paradigms, there are changes in new technology, and the outcome is it's opening the doors for more and more financial institutions to offer cross-border payments. Whether you're an EMI that wants to attach the ability for your customers to make a remittance or a P2P payment from their prepaid card or account, whether you're a credit union and you have members that are small businesses and they need to pay for imports or pay suppliers or pay foreign consultants, or even if you're a large financial institution and you have hundreds or thousands of people that are manually going through the challenges of all of these non-automated activities, the world has changed. And this is going to lead to an environment where every financial institution, no matter your size, or nearly every financial institution, will have the opportunity to offer cross-border payments, international transfers. And these products will not just be same old, same old. Not only are they going to be safe, they're going to be efficient, which means fast and low cost, and they'll be inclusive. So we are absolutely on the cusp of some very, very significant changes in this industry. And this panel will dive into that over the next 35 or 40 minutes or so. So with that, Matt, back to you.
Thank you, Gary, and thank you for the overview. So I'd like to introduce the panel, if everyone can join and switch their cameras on. So in comes Noyan as well. So we'll start based on the way my screen's working. So Nuala, if we could start with yourself, please. Give us your name and a brief introduction.
Thanks, Matt. So good afternoon, everyone. I'm Nuala Jackson. I'm the Payments Director here at UK Finance. I'm responsible for all things payment systems related, and that ranges from wholesale cash through to our domestic payment systems and our cross-border payments. I've been here about a year and a half. Prior to that, I was at Santander UK leading their payments change roadmap.
Fantastic. Thank you. Mark, if we could come to you, please.
Yeah, sure. Hi, everyone. Mark Cortori. I head up MasterCard's strategy and solutioning team for our transfer solutions business, which is comprised of our suite of products, which enable payouts to a multitude of endpoints, including bank accounts, cards, mobile wallets, and cash pickup locations in over 140 countries. Very excited to be here and looking forward to the discussion.
And then finally, Noyan, if you could join in, please.
Thank you, Matt. Good afternoon, everyone. My name is Noyan Nihat, Chief Operating Officer of Privat3 Money. We're an EMI, specialised in cross-border payments. My background is in the EMI space, and I've held licenses in Europe and in the UK before. I'm currently a member of the Payment Association Advisory Board, and I specifically sit on the cross-border committee and also mentor the Project Inclusion Committee.
Fantastic, thanks. So as everyone can see, we've got a really good panel of experts across the board from varying backgrounds and coming at this from slightly different angles as well. So the conversation should be really good. So the first question we want to talk about was how secure are funds and data in the new paradigm? And I think that's a broader topic, but I'd suggest we start with what are the risk factors? Because I think that's what generally drives indecision and lack of innovation is people trying to risk mitigate, and it challenges driving things forward. So Nuala, if we could go to you first, please.
Yeah, thanks, Matt. I always think international or cross-border payments, it's a little bit like opening up a bit of a black hole. Like you understand how it works in your own market, but once you start, building, multiple change, it gets so much harder. So, I think understanding and kind of moving to more standardized approach and common messaging language, I think all of those elements are going to help reduce the risks. But at the moment, we still haven't got that level of interoperability yet. So I think that's that's a kind of key risk is a bit of the unknown.
Absolutely. We often hear about harmonization comes up as it's a great phrase that people use, but it's simply said, but very hard to achieve. Mark, we could come to you and get your thoughts on the subject, please.
Yeah, I would agree with that. I think for what I've seen in the market, I mean, the biggest challenge has always been the compliance and regulatory risks, right? So the changes in regulations or the non-compliance with existing ones, which lead to challenges in not only for the bank, but for the sending and receiving customer, because it causes ongoing delays in the payment being made. So that lack of standardization across different jurisdictions has always been a problem. I think one that needs to be addressed, but at the moment hasn't been well addressed. And then obviously there's potential for fraud and scams that exist within cross-border payments. So in the US, we see a lot of these romance scams. So I think through the new technology that's coming out, we have an ability to crack down on that, but that obviously poses a big risk to the ecosystem.
Completely. And Noyan, I know you have with the role that you have at the moment, there'll be a slightly different variance on this.
Yeah, I probably come at it from two different angles. I mean, it was interesting watching Gary's eventually his slide deck moving there, where he has a great solution. I mean, for us, cross-border, security, the source of funds and the recipients are key. So, gathering the information, and again, as Gary was showing us, anything from contracts and invoices are quite key and slows the process down. So we're always looking at how we can be more efficient. And I think from the commercial aspect as well, cross-border, one day maybe it'd be borderless in the way how payment rails are working. And I have to say, I noted an article recently, I think it was Wise, who'd quoted £2.8 billion worth in 2022 was in excess of FX fees to SMEs and hidden banking charges. So it's just not the safety and security, it's also the fees that banks are charging currently. Of course, I'm an EMI, so I'm one of the good guys.
Matt, back to, not to be contrarian, but UK Finance hosted a session several months ago with a variety of some of the largest banks and small banks in the UK, as well as lawyers. And we've taken the view that this idea of standardizing terminology, standardizing language, harmonizing compliance rules around the world or regulations, we think it's impossible. We just don't view, when you look at the diverse interests around the world, we think that to try to depend on that as some sort of future state is very unlikely. So what's the solution? The solution is having software that allows the ecosystem participants to ensure compliance, to help collect and analyze data, and to do it in a way that's efficient. And so if we get to a world where everybody around the world decides to get in the sandbox and play together, that's great. But if we don't, we need to be prepared for the alternative.
Okay, very good. I think on your point around harmonization, it is an interesting point because everyone has their own version of what that means. And as we've seen, to get adoption and to gain a change, there has to be a common theme and goal around that. So, Mark, you mentioned fraud and romance scams is especially something bigger case in the US, but it's prevalent around the world. And I think that's something whereby unifying how you measure, a negative entrant or someone in a nefarious task is a way of pushing that forward. And I think that's where we'll gain adoption end to end. I know Gary will always come up with some contrary views, which is good because we don't want a harmonized view across here. We need to have differing perspectives to drive these things forward. And obviously we welcome any questions, just to remind everyone who's joined throughout the session. In fact, I say that and we've got one now, so I'm going to go to that if it's okay, guys. Considering the challenges outlined in the G20's roadmap's 19 building blocks for cross-border payments, would the adoption of Ripple's XRP and Stellar's XLM tokens be a feasible solution for creating a faster, cheaper, and more transparent ecosystem? Just take a breath. The native tokens of these companies are known for their zero fail rates in processing instant settlements and payments since inception. Rather than singling someone out, does anyone want to pick that up first of all?
I mean, at a high level, good. Sorry, good, Nguyen.
I mean, I know something about both those particular methods of transportation, if that's what we call it. I mean, they're certainly seamless and instant. I'm not sure it gets away from the issues of compliance and gathering the information that you still need. Going back to Gary's model, I think you're still needing that information, and also, even though you can transport it, you still need to convert to fiat. So I believe you still then need to connect to different partners globally, wherever you're sending the funds. So to me, it still sounds not like a seamless solution, and it can be a little chunky. It's an alternative method of payment, but I'm not sure it would solve all our problems.
I think the technology is interesting, but to your point, it's how do we gain adoption of XRP and other cryptocurrencies, right? So fiat is obviously the go-to for the majority of the world right now. In order for those types of solutions to gain scale, what they need is adoption and usage of these different types of tokens, or otherwise we run into those same instances that Nguyen just pointed out.
I mean, there may be use cases where it's relevant, but en masse, it's not going to be a big factor. And here's the reason why. You still have data collection issues, data verification issues on the originating side. And the fact is that blockchain is not as efficient or fast or green as a global single shared platform. It's actually slower and costs more, burns more cycles, and it's not inclusive. So while there are definitely use cases for tokens and DLT or blockchain, it's certainly not a panacea, and it's not something that can be adopted en masse. In fact, very few financial institutions, and certainly those that have that are supporting the lower end of the socioeconomic spectrum and that in developing countries, the CTOs can't spell DLT. It's just not on the roadmap for a core bank system or a digital bank platform. So we have to be very honest and open and hypercritical of the world we're in, and try to deal with the situation as we see it.
Okay. And Nuala, did you have anything you wanted to add to that?
No, other than, it's a technology that can be used, but it just doesn't solve for kind of the wider issues.
I think Gary mentioned it, and you've all covered it in various different degrees. On this side of things, it's super interesting, and there are key use cases that it works for, but there isn't this nirvana or panacea where, one thing fixes all. I'm going to come back to the harmonization word. It's probably going to be a harmonization of several different threads coming together and software or rails that actually give this, at the end of the day, the consumer doesn't care how it happens, as long as it happens safely, securely, and transparently. Whether there's one leg or 15 legs, as long as they don't see it, there's not really a concern there from what I can see. Now, what we're going to do is we're going to move on to financial inclusion. Now, the question is, what is the opportunity to grow financially inclusive options, including the underbanked? Is it mobile money and cash pickup, etc.? But before we get into that, I'm just going to read some stats out, which I think will help set the scene as to why this is important. So the World Bank defines financial inclusion as individuals and businesses having access to useful and affordable financial products, which I think is key. Now, according to last year's Financial Inclusion Index, interestingly, the US declined from second place out of 42 markets to fourth, while Singapore came in at the top. The Singapore piece is skewed slightly by the volume of people versus the facilities available, but we'll bear that for a second. What becomes really interesting is that 5 out of the 10 top markets were European, with UK and Thailand both being new to the top 10, having displaced Finland and the Netherlands. What probably won't come as a surprise is that the bottom 10 countries within that report are located in Latin America and Sub-Saharan Africa. There are some outliers, Brazil being one that obviously we can talk about. I think what drives this as well is there's a trend that shows a clear connection between economic advancement in region or in country and financial inclusion. The only exception to that would actually be Thailand. We're also finding that financial inclusion is happening fastest in the economies that have or are building a digitally enabled financial system. So before I hand over to the panel, I think what I read from that report and the things we've discussed and we all see in the market is actually there's a perception versus the reality. Because I think if I were to ask in the US, for example, certain demographics, do they feel financially included? And the UK and others, they would probably say no. It really depends on who you asked and when you asked. So on that notion, I will hand over to, I think I'll start with Nguyen, if that's okay.
Yeah, I mean it's interesting because UK popping up there is a bit of a telltale sign as well. I suppose it really depends. I mean, I think in the world of compliance and Big Brother, that has had some impact on the ability for individuals to even have a bank account. We've looked at regions like South America and Africa in the fact that they've developed in different directions. But being able to actually afford and use particular models globally is interesting to see how they've all developed digitally. And in the UK, we're losing more and more bank branches. Everyone is being pushed towards digital. We're talking about our own digital coin, and in theory, cash is disappearing. But is that really what the market and the public want? So I don't know if things have really improved, and it's as I said, it's probably more shocking to see some fairly big first world countries being in that table.
Yeah, and interestingly, I saw on the UK for this specific example that actually contactless payments has accelerated significantly with the over 65s in the last 18 months, which is, a lot of people wouldn't classify that as digital, but to certain generations, that's a big leap ahead of going to the cash point or the local bank to withdraw cash. So there are interesting nuances that are coming in per region. Mark, I'll come to you next, if that's okay.
Yeah, so at MasterCard, we operate under the mantra of if it's not inclusive, it doesn't scale. If it doesn't scale, it doesn't matter. So we're designing products that give the consumer and businesses greater choice and convenience. So for instance, as I mentioned before, our cross-border services product enables payouts to not only bank accounts, but mobile wallets in markets where those are prevalent, cash pickup locations in over 50 countries and expanding using local infrastructure that's familiar to the population. I think there also needs to be a greater focus on financial education and literacy to empower the individuals to understand and utilize financial services effectively. And then obviously government initiatives, so collaboration between the public and the private sector in promoting financial inclusion. These will help develop a more inclusive ecosystem that benefits all. Just one example, so in Egypt, government regulation recently prompted banks to become more digital and engage with the country's instant payment network. Similarly, the Central Bank of Egypt also rolled out a new national payment scheme called MISA, which enables interoperability between digital wallets and banks. The bank population in Egypt is relatively low, yet around 80% of adults are now using these digital solutions.
Interesting. Thank you. Nuala, come to yourself, please.
Yeah, sure. So you're talking about some World Bank research that has been done. I read some recently that said that particularly migrant populations or those who are kind of less well served by financial services, although they quite often have a bank account, they use their bank account to receive their salary, to pay their bills, but they're not actively using their bank account to send remittances, so perhaps send money back home, and their preference is to use like money transfer organisations or even good old cash in hand. So I think whilst I think global payment remittances have a huge part in driving financial inclusion and growing economies, it's good to try and unpick and understand why those particular cohorts aren't using kind of traditional methods. Is it cost? Is it speed? Do they think it's more secure? I think it's kind of quite an interesting perspective. Trying to understand what's better, what's driving their preference.
Absolutely. And Gary, obviously, I want to get your opinion on this as well.
I'll just keep it short. The idea of inclusivity is absolutely core to enhancing and improving the lives of people around the world. For products to be inclusive, they have to be easy to buy and easy to use and accessible. And we're seeing really material changes when we look at what MasterCard has done, and Mark is being, I think, humble. MasterCard's approach to its transfer cross-border product, which is to enable funds to not only go to a bank account, but cash pickup, mobile wallets, and digital accounts, is enormous. It means now, for the first time ever, if you have a bank account in the UK and you want to send money to someone in the Philippines, you're not limited to only sending money to 1/3 of the population, but to everybody, because you can now reach them that way. At the same time, the enhancements around technology and the interoperability with systems will create even more efficiencies and inclusivity. What do I mean by that? Other parts of the world where we saw the deployment of transportation-based cards first, and then we've seen those cards move to work at the point of sale. Well, imagine now when those cards and accounts become able to both send and receive cross-border payments as well. So we're going to see evolutions in the deployment of technology and capabilities that continue to create ways for those who want to be a part of an electronic financial system to do that. I don't believe in forcing people to do it. I believe we have to respect the individual choices of folks around the world, but it's important that banks, financial institutions, regulated entities are engaged in a way and offering products in a way that invite and make it easy for someone to get into the system if they want to be in the system.
I don't know if any of you saw a recent piece of news which talks about inclusivity from a different side, and it was due to a cable outage in the Red Sea that was actually impacting transfers, obviously data transfers, all the wires that go through that. And because of the geopolitical part within the Red Sea and the countries that surround that, they've actually had to reroute things and cause delays in various other options, which again, these are some of the slightly more challenging markets to provide financial inclusion and services to the underbanked. And I think we need to be very aware that it's not just the payment rails that we deal with things and how we bring it in financial inclusion, but there are other impacting factors. Geopolitical ones especially always come in. And we've had a few more questions come on the line. So one of which I'll come to later, which is from Luke Cuttajar about Ripple, which we'll discuss in a second. But the one from Conor McClure says, Gary references software solutions. Is this a more viable solution than wide adoption of the standardized messaging, such as ISO 222, so that institutions on each end can potentially adapt their existing tooling? I'm going to let you put hands up on that, because I think everyone on this call will have quite strong opinions.
I don't want to, I can't reveal any sources because that would violate trust, and I'm not going to do that. I'm friends with a lot of bank CTOs around the world, and there's a big difference of coding to a new spec like 222 versus doing something with the data, storing it versus letting it fall on the floor, including it as a part of an authorization routine or not. So the idea that we can imagine if you've got a body and you've got blood flowing through your body, but when it gets to the endpoint, that endpoint is either leaking or it can't handle the nutrients that are there, that enriched or enhanced data doesn't really mean much. So I think that this goes back to software on either side of that transaction, whether it's on the sending side or receiving side. If the software is merely accommodating the additional data elements in the spec, but it's not interrogating it, using it, storing it, or otherwise benefiting from it, and if it's not enough, if there's not enough in terms of artifacts or data to solve the risk or compliance or decision-making problem, we haven't solved the problem. I think it's great. I think it's a good first step. But again, these things are not panaceas, and they're not all inclusive in terms of how they solve the problem.
Absolutely. Mark, would you like to join in?
I think it goes back to standardization again, right? There's no one size fits all for compliance and risk requirements across different jurisdictions, let alone different banks. So to Gary's point, yeah, having all that information will certainly help the problem, but being able to customize the software that's able to ingest that data for individual banks' requirements, I think is going to be critical in how we address this issue.
Okay. Nuala, sorry.
That's okay. Just to add there, I think there's been a huge kind of compliance and regulatory burden on institutions to kind of move to this standardization. But I think we're we're reaching a point now where we need to look at, how do we leverage that data and utilize, what software's out there to help us get the most out of it, because there is a real risk that, we're just getting all this data and it just drops on the floor and isn't used for the benefit of, I don't know, whatever, fraud prevention or screening. I think,
it's really, I mean, listen, it's not the bank's fault. I mean, if you think about it, I think the toughest job in a bank is the chief technology officer or chief product officer, because the reality is you're trying to keep your systems working. So a big pile of your budget is dedicated to that. You're trying to keep the hackers and the bad guys out. So you've got a ton of money and resources dedicated to protecting your data. And then you're dealing with ongoing regulatory changes every day. So you've got this tiny little bit of money left over for new product development. How do you possibly manage, as a chief technology officer, chief product officer, being able to innovate and actually build new software capabilities that allow you to handle that new data that's come in? It's a terrible job. And the CEOs are constantly pounding on the CTO and the chief products officer, cut costs, cut costs, cut costs. I mean, we need to be very open and honest about the difficulties the head of an EMI or the head of a bank face when you're trying to innovate and deal with changes like this, when you have all these other things that are sucking away your time and energy.
I hate to agree with him, Matt, but I'm going to have to. It pains me, but I think we're all on the same page. And the problem is the world isn't on the same page, and that is the major issue. It's very disjointed, and even if you look at risk appetites, everyone will, different banks and EMIs will all have different levels as well. So I mean, I think the data is there for sure. We agree on that, but ultimately the usage of it and us using one universal platform, I can't see it happening.
So taking all of that to account, I think that leads to an interesting topic that we could discuss. So let's use the banking and FI community as a whole. We've said it's very challenging, risk. I used to be head of technology at Citibank. I lived and breathed it every day. It was hard work. But is there an opportunity for you to conjoin your DEI strategy, your financial inclusion strategy, and even part of ESG with your budget of risk appetite and innovation? Are these things being done in silos when actually there's an opportunity for especially the big banks and corporates to conjoin these and actually get a valid use case that delivers on multiple fronts rather than trying to do it on an individual basis?
I'll just quickly say, not being a bank, it would make my life a lot easier as an EMI, because we're reliant on, and banks and many EMIs and payment institutions are reliant on the bank's risk appetite and the link as you've described. But I don't know if that is the bank's priority.
Yeah, we fall under a similar category in that we're largely dependent on our bank's risk appetite, and a lot of them frankly just don't have the appetite to get into some of these quote unquote riskier flows, especially those that enable the payout to cash. But there's a very large population that still is highly dependent on cash. So it's a topic that needs to be addressed. I just don't think banks have gotten to that level of comfort just yet.
Okay, Gary, Nuala, any thoughts on that?
I haven't really thought about that so much.
Yeah, I think just going back to your earlier comment, Matt, there is just so much congestion, so much to do. I think balancing it with kind of risk appetite is kind of reducing appetite to take a kind of more riskier step forward.
Fair. Okay, good. And I think we know, right, especially we'll call them incumbents, for a better phrase, everything is wrapped around a risk appetite. And generally, if something unfortunate happens, or nefarious or otherwise, or a system failure, it tends to be another process, often manual, is wrapped around prior processes, so that it just gets bigger and bigger, and there's more friction points integrated as opposed to removing them. So, okay, I think the next part that we'll move to, we don't have any more questions currently coming through. So please, if anyone listening has any more questions, we will look to answer them. Please send them through. How big is the market opportunity for financial institutions to start offering cross-border payments and solutions? And what are the potential costs or even barriers to entry? We'll go with Gary this time, first of all.
I mean, I'm so that's our business. We want to enable banks, EMIs, credit unions, anybody that's properly licensed to access this market and be able to offer them. And if you're on the receiving side or court, and we want to, we're partnering with companies like MasterCard to make that easier to do. So our whole, this is all we do. And on the other side, we're actually backward compatible. So if you're a global correspondent banker, you're providing FX trading and liquidity around the world to hundreds of thousands of banks. We've got software to help you make those payments more efficient, safer, and more inclusive as well. So this is just all that we do. And we think that we think the world has changed over the last few years. And there's never been a better time for a financial institution to look at getting into this business. Because the fact is, if you're not offering it, you're not supporting your customers. You've got customers that in some way or another need to make a cross-border payment, or they're receiving it. And if you're not offering it, they're getting it from someone else. And I think, MasterCard and others have some great stats on that risk to the financial institution community. But now it's never been easier to do it. So every FI should look at doing it.
Okay.
Yeah, I would agree. I mean, the opportunity is huge, right? I mean, we see from the World Bank that remittance volume for 2024 is projected to be almost $900 billion. Cross-border B2B flows upwards of 200 trillion. So the opportunity is massive. I think what the banks have been waking up to recently has been the introduction of companies like TransferWise, who've come in and started stealing pretty significant share from them. But to Gary's point, I think one of the biggest costs that these banks face is around technology, and that's why we're happy to partner with Payall, because they've just made the process of onboarding banks and running the platform much more seamless and cost effective than if the bank were to do it on bank or non-bank financial institution were to do it on their own.
Okay. Nuala, your perspective.
Yeah, I was just going to say that, talking to our members, I think probably in the last 12 months, interest in the cross-border space is growing. I don't know if everybody's getting over the pain of Brexit, but I think, things like the TransferWise example as well, I think, it's making firms wake up to the opportunity. And like Gary says, if they don't offer it, then their customers will go somewhere else and use it. If you need to send a payment overseas, it's not for fun. That there's a need. You need somebody to help you do that. So you're gonna go wherever best suits your needs. So financial institutions need to kind of wake up to that demand.
And Noyan, I know you'll have something to say on this.
Just a bit, and I was quite impressed. We nearly got through this entire call without using the B word, which was Brexit. It's been interesting.
Sorry. I'll put my pound in the jar.
For us EMIs, but I mean, no, look, I mean, we thrive on it, I think, as Mark was saying, the technology in some of the banks and legacy systems has opened the market up for certainly for APIs and EMIs. I'm still, I still look at some of the UK market where they're launching products and they don't give you the treasury platform, they don't give you the FX platform, which I scratch my head at. I mean, we at Privat 3, we do multi-currency accounts, and we have a full range of FX, and the likes of Wise have, in a way, dominated the market, but they've also showed, I think, a path forward. Using your traditional high street banks for FX right now is just crazy when you think about how much they charge you, and also the speed of it. And this is where I think EMIs find that gap in the market where they've got local settlement and the ability to, if they wish to use SWIFT, great. But if not, and for us, for example, we have local rails in Europe, obviously our own sort code here in the UK, but more importantly, we have local rails in the United States. So we're not reliant on SWIFT, and we can do instant payments using, real-time platforms. And I think customers want that. They want to see it at cost effective. They want to make sure it's a trustworthy rail that they're using, and they want it delivered instantly. Why would you wait 2 or 3 days and it costs you £30 to send £100? It's nuts. And there are solutions out there galore. And maybe the bank should catch up. I'm quite happy they're not, by the way. And as I said, solutions with, and I go back to it, we're very interested in Gary's proposition and the partnership with MasterCard Send. I mean, all these new developments are just expanding the market, and the world is becoming a much smaller place. Absolutely. So payments have to be instant and without border, in my opinion.
What you've built at your company is exceptional. You stand out in terms of the software and your approach to the market. It's really, really impressive and remarkable. What MasterCard has done is amazing. What I would say is that all of these things, and when we look at even new paradigms where domestic networks around the world finding ways to connect with each other, going beyond the sort of bank transfer rails, but into even, mobile money and those options. All of these new things will lead to better user experiences. And that was the objective of this, or the headline of this session, is how do we have a customer or user-centric approach? What's really important here to understand is that if you are a bank, or you are a credit union, or you're some other financial institution, you got to wake up, because the world is changing around you, and you got to get involved, or you're not going to be supporting your customers. And I think that's one of the messages that we try to deliver. And I know that it's sometimes hard to get out there with all of the noise happening around us. But this is not, when I started my first company in 1996, the idea of prepaid cards didn't exist. And so we were building an entire industry from scratch. Cross-border payments is $160 trillion. It's not from scratch. It's here. The money is going. The question is, will you be a part of it, either enabling it or supporting it, or are you going to be standing on the sidelines losing it? And so we would encourage financial institutions, EMIs, PIs, to really look at the options that are out there today, because there's a way to get in the space.
Yeah, I'm not sure the banks are that focused on it. That's the problem. They're making so much money in other aspects of their day-to-day lives. And I think, like you said, the tech savvy EMIs or PIs out there are very focused on that, and very focused on the customer-centric on delivering a service. That's key. And we don't have the deep pockets of the big high street banks. So we have to deliver every single time.
I think that really salient points. In my background, my line of work is actually cross-border commercial foreign exchange, cross-border. And at Travelex, we took a lot of business away from the banks. I'm now seeing, as many companies have come along, some are represented on here, and we've mentioned some of the key names, how the banks have suddenly realized actually there's an opportunity here for them to get back into it, but they've almost waited too long. Wise is the big success story. You're seeing people like Revolut now offering more and more FX-based services that are free, streamlined. But the banks are waking up, and I think it's more probably that you'll see on the B2B side. FX especially was B2C initially, and now B2B is coming through more and more. Having asked out to the audience about questions, we suddenly had an influx, which we won't get through by the end of this call, but I picked out one from Steve Mallet, which I think is pertinent to what we just discussed. As we further complicate and widen the scope and coverage of cross-border payments to be truly global, settlement will remain the biggest challenge, which is not necessarily a technology challenge. How does the panel see this being resolved, improved, and streamlined? Before I hand over to you guys, we're just about to turn to 10-2. So if we can have quite succinct answers. I'm going to go Nuala first, please.
Okay. I think technology can make it happen. So I think it is in part a solution, but I think it goes back to the point we discussed kind of at the top of the session around risk appetite and, how quickly do we want to make things happen? Are we prepared to kind of take that settlement risk? Because I think if we want to do it, I think technology is a key enabler to it.
Fantastic. Mark, I'll come to you.
Yeah, I would agree with that sentiment. I mean, there's a lot of hype around movement of funds in real time, which is very important, but there's also that finality to it, right? So once that money is gone and that settlement is done, there's no getting that back if it was done in error or if it's fraud or anything of that matter. So I think technology will help us get there. But to Nicolas' point, it's a matter of the risk appetite that the global, larger global financial organizations have.
Fantastic. Noyan?
Yeah, not much to add. I agree with all those sentiments. I think fraud comes into it, but the tech is exactly where it lies. I haven't caught up with the likes of Nick Ogden for a while, and I know he's out there parading some solutions with his concept, but it needs the big banks and the central banks to think about how that's going to work. But it's going to have to be tech based for sure.
Matt, I would only add there are a plethora of liquidity options. There are very efficient FX traders around the world, more today than ever. And so it's being able to tap into those liquidity pools and options and FX traders and make it available to the ecosystem. I think that there are plenty of alternatives today.
Fantastic. But I'm going to squeeze one more in just because I feel like being provocative. How can we combat the lack of relationship management applications across banking institutions? Remitter banks, especially commercial banks, do not tend to have well-established relationships or communication channels with their own agent banks who even hold their money. Does anyone want to pick this up? Or rather than just picking on someone, some may have more views on this than others. Gary muted himself, so I'm going to Mark.
Again, I think a lot of this has to do with technology and the infrastructure that exists, right? So if there's a better way for the agents to be able to communicate with their banks in a more transparent and seamless way, I think that will drive a lot of the transparency around those relationships.
I mean, I couldn't function if I didn't have an excellent relationship with all my banking partners. So, again, a lot of it's tech and, we're API driven. So we're certainly on that side of the coin. It's a key area. So, we can follow the string to every single payment. And going back to, Gary's point about compliance, we provide that as well, if need be, to the endpoints or the start points. So everyone's included. Just touching on customers, I know that's a slight twist on this question, but we also provide one-to-one relationships with all our clients. We have the bot, but if someone wants to know where the money is, they'll speak to hopefully not me, but there is a plethora of individuals here at Privat3 that they can speak to face to face. So the technology's there, and we're very open to making that available.
So, Matt, the only reason I put my phone on mute is I wanted to give other people a chance to answer, because this is like one of the most exciting things that we do that I love. If you're a big global bank and you've got the FX trading and liquidity around the world, and you now have hundreds or thousands of banks signed up around the world that you're providing correspondent banking or cross-border payments to, part of our platform, and we spent tens of millions of dollars building it, is that big correspondent bank can give their partner banks around the world software. And this software covers every single aspect of the cross-border business, from boarding a customer to enhanced due diligence to automating the collection of bills of lading, customs declarations, and all of these things are rules and risk driven. And then that data now becomes instantly available for decisioning, both at the originating bank, wherever they are in the world, the RMA around the world, and the receiving bank on the other side of the transaction. So this is an area that I get energized about. So I put it on mute, not to jump in too quickly, and wanted to give others a chance to talk about it.
Okay, before I get told off by Kate, Nuala, is there anything you wanted to add to this at all?
No, only other than, as we're moving to ISO, I think we are seeing improvements in the capabilities to communicate better. The newer players are much more innovative in their kind of communication solutions, but kind of traditional cross-border payment methods are pretty old and creaky. But I think we're starting to see improvements in that space. But it's slow.
Awesome. Okay, so I am going to get told off in a second, so I'll keep going because my mic's on. We had a message from Luke Cuttajar, who's from Ripple, and he said, and I think it's only fair that we call this out on this right now. The panel's understanding of how Ripple and Stellar work is incorrect. The last mile payout is always delivered in fiat into instant fiat payment rails. So I think just to be fair, to call that out.
I'm sure. I think I sit next to his boss on one of the advisory boards. Yeah, that's true, but you still need to onboard with the other end, if that makes sense. So you can onboard with Ripple and great company, big shout out to them. You know, they provide a great service, and then you've got to onboard. And I think Gary's nodding here. You got on board with the company, the other end in Brazil or Venezuela or wherever you want to be able to receive it into fiat. So I'm not saying it's not doable. It's just not seamless. And if I want to transact with 20 countries, in theory, I'm going to have to also onboard with 20 different conversion companies or providers of the fiat exchange.
Fantastic. It's good not to finish.
Tell me I'm wrong again, but anyway, that's my understanding of it.
Yeah, but it's good not to finish on a loving, right? We can't always agree on everything, and we have to have different perspectives. So I will wrap up very quickly before Kate just cuts me off and mutes me. So I think what we're seeing here, we talked a lot about standardization, harmonization, but it doesn't necessarily mean it's ISO, for example. Harmonization or standardization seems to be more about partnerships and engaging with the right key partners to create a seamless, frictionless journey for the consumer, whether it's B2B or B2C. I think that seems to be the thematics. And obviously the key driver around all of this is actually democracy of access to financial services that are relevant and useful either to the individual or an SME, regardless of where they sit in the world. So on that note, thank you very much to all my panelists. I'm reading across the screen to Nuala, Mark, Noyan, and Gary. Thank you all to the audience, and thank you for...
Thanks, Matt.
Cool. And thank you very much. Thank you, Matt, and thank you to all our speakers for your time today. It was a really thoughtful and thought-provoking session, and I think we can see that in the questions that came through as well. If you have any other questions about today's webinar, please contact events@thepaymentsassociation.org. You will also shortly be receiving a survey on the webinar, which we would really appreciate if you would complete this and provide any feedback. And you'll also receive a follow-up email within 24 to 48 hours with a link to view the recording. So on behalf of the Payments Association and all our speakers today, thank you so much for joining us and have a great rest of your afternoon. Thank you very much all.